Hey, good afternoon, everybody. This is the October crude oil, and as you can see, this is the current downtrend that the market is trading off of right now. This is an old downtrend that we were previously trading off of, and the interesting thing is all I had to do to get this downtrend right here is take this downtrend, duplicate the same exact angle, and then put it on that high. It's the same exact trend line. Vice versa, this is the uptrend that we're operating off of right now. All I had to do is duplicate that trend line and move it up to here, and that's the channel that we're in. So it's amazing how that stuff works out that way. But right now, this market is trending down from the highs that we had put in near $84 a barrel. And we were fortunate enough to catch a nice $5 move to the downside through our trade recommendation. And we're still going to stick to the sell side of this market. As far as today, we did have a little bit of dollar weakness, which helped provide some meager support to the market. But the market's trading some disappointing growth data out of Japan. That kept all the rallies in check today. And that growth data will speak directly to our global economic growth potential. So last week when the Federal Reserve made the steps that they made, it does not send the market a message of confidence in our economic recovery. So some of the other stuff that we're watching right now, the total U.S. crude and petroleum stocks hit record levels earlier this month. The refining margins are declining all over the country. I believe every area reported reduced margins except for the Rockies here. So we're seeing reduced margins here. We saw refinery utilization reported lower last week, and we're still seeing builds in our product inventories, and that speaks directly to demand at this point. So while we may be tempted to buy the uptrend here, if that's something you want to play, it is entirely possible that this market may stay somewhere between the $70 to $80 zone for the most part. If you're in that mindset, you could either look to buy this uptrend right here or possibly look to buy this support right here. It's interesting, if we do come down here and then bounce back up near $80 a barrel, that'll be a nice long-term head and shoulder top that we may look to play. But our bias is still to sell these rallies. There's a 20-day moving average that's going to sit just below $80 a barrel, and that's currently where our recommendation is to sell at this point. Now, part of that bias to sell is also brought on by the recent move in the dollar index, and again, this move was prompted by the Federal Reserve last week. Last Monday, we had made the recommendation to buy the dollar index at 81.35 on a stop, which would have been above this area of consolidation and the 200-day moving average. And you can see what the market did, both technically and from a fundamental perspective, when that area was violated, and that was violated because of the Fed's decision. Now, we did have some weakness today, but really all we did is we kind of retested this little short-term uptrend that we're on, just a little bit of consolidation. If we can take out last week's high, which is Friday's high, short-term, you're going to have a target of where the 150-day moving averages converge. If we take that out, now we're just going to be outright bullish the U.S. dollar. So we're going to watch out for that. But again, right now we are looking to sell rallies in crude oil and buy dips in the dollar.